Yeah. Bank Reconciliation Statement BRS. What is BRS and what is the need for BRS? See, normally what we do is in business we prepare a cash book at our side. That is, the accountant of a business prepares the cash book where he enters all the cash related transactions or all the transactions in terms of cash or money, right? Whereas we maintain our business account with our bank, and our bank also records the transactions in the passbook, right? So cash book is with the accountant or with the firm, passbook is with the banker. The entries in the cash book will be done by the firm individual, whereas entry in the passbook will be done by the banker. So at the end of the day, when I'm tallying my cash book and my passbook, the balance should coincide. That is, whatever the amount which I'm depositing, whatever the amount I'm withdrawing is being entered in cash book, the same will be entered in the passbook. But here the entry will be made by the my accountant. There the entry will be made by my banker. So at the end of the day, when I'm comparing both my cash book and passbook, the balance should tally, right? But there might be some situations where the cash book balance and passbook balance may not actually tally. So when there is a difference between balance as per cash book and the balance as per passbook, we'll prepare BRS. We'll prepare a bank reconciliation statement to know what are the entries which resulted in this difference, so that we'll rectify the difference and we'll arrive at the actual balance position. Clear? So that's why we prepare BRS. So BRS, bank reconciliation statement, is prepared to rectify the difference between balance as per cash book and the balance as per passbook. Who prepares BRS? The firm. That is, the person who wants to trace out the difference between the cash book balance and passbook balance will prepare the bank reconciliation statement. That is, BRS will be prepared by the accountant or by the firm, not by the banker. BRS will be prepared by the firm but not by the banker. Clear? Now, what are the reasons for this difference? See, the reasons are broadly the reasons for difference between balance as per cash book, which is maintained by the firm, and the passbook, which will be maintained by the bank. The difference between the balance as per these two books is mainly because of three reasons. One is error, that is, error made in entry. Maybe for 100 I have written some thousand, error made in any of the book, it can be anything. Second is entries which do not require change in cash book. That is, example is, see, check has been issued but not presented for payment. That is, I have issued a check of say 100 rupees. So when I am issuing a check in my cash book, cash is a real account. So debit credit rule is debit the receiver, credit the giver, right? So cash book will assume double column cash book, that is cash bank debit side, then credit side also cash and bank. So I have issued a check of rupees 100. So I have issued check, that is, this is going out. So debit what comes in, credit what goes out. So my bank column, uh, the amount has been sorry, debit what comes in, credit what goes out. So cash is going out, so my cash is going out, so it is credit side under bank column, check by way of rupees 100. Clear? Or say my cash book, since I have issued the check, I'll assume that the 100 rupees payment has been done. Since 100 rupees is flowing out of my system, since cash is a real account, I'll write under credit side of my cash book. So in my cash book, I'll adjust this entry. I'll make this 100 as a payment. But the check has not been issued, they are not been presented to the bank. See, I am due, see, Mr. A is due to Mr. B. So Mr. A has issued a check of rupees 100 to B. So as soon as he issues us a check, Mr. A in his cash book writes this under credit side since cash is going out, right? But the entry in his passbook will be made by his banker only when the check has been presented for payment. See, he has issued the check, so as soon as issuing the check, he has made entry in his cash book. But Mr. B has not yet presented this check in the bank. So since he has not presented the check, bank has not debited A's account still. So as per passbook, Mr. A's account is still this 100 is existing in A's account because check is not yet been presented. So here the balance as per cash book is more compared to the balance as per passbook, right? Here this entry, the check issued but not presented for payment, that entry need not be required to be entered in the cash book because check is not yet been presented. But when I'm making an entry which is resulting in a difference between cash book balance and passbook balance, so that is one reason, that is entries which do not require change in cash book. Another is entries which require change in cash book, that is interest paid by the bank, payment directly made into the bank account, or standing instructions executed by bank. See, my bank has credited quarterly interest to my account. I don't know. I'll know that interest is credited to my account only when I'm taking the account statement at the month end. So I don't know that bank has credited interest. So I'll not record that amount in my cash book. So since interest is coming in, amount is coming, debit what comes in, credit what goes out. So I should enter that amount under debit side of my cash book. But since I don't know that bank has credited interest in my account, I'll not be entering that amount in my cash book. Whereas since interest is paid by the banker, he'll make that credit entry in the passbook. So the balance as per passbook will be more than compared to the balance as per cash book. So here the entry requires an entry in cash book which is not being entered, because of which there is a difference between balance as per cash book and passbook. Clear? So BRS is prepared to rectify or to trace out the transactions because of which there is a difference between balance as per cash book and balance as per passbook. So main reasons for this difference is categorized into three types, that is because of error, second is because of the entries which do not require change in cash book, third is entries which require change in cash book. Clear? Yeah. See, we get a problem, numerical problem, maybe for 2 marks in exam. So in exam he'll give that he'll give maybe opening balance as per one book, either cash book or passbook. He'll give some transactions and he'll ask us whether we need to add these transactions or subtract these transactions and get the balance as per other book, right? See, example, he'll be giving the balance as per cash book as on date, then he'll be giving some 3 or 4 transactions, then he asks us after considering these transactions what will be the balance as per passbook, right? So we need to either add or subtract these transactions to the given opening balance, so so that we'll get the balance as per other book, right? So simple rule is, that is whether we need to add these transactions to the opening balance or subtract these transactions to the opening balance. To know that, we have one simple rule, that is, if given book balance is more, then subtract that. See, normally we have two cases, favorable and overdraft. Overdraft is the opposite, that is overdraft is a loan account, or overdraft is drawing more than the available balance, right? So in BRS, unless it is specifically mentioned, we assume all the transactions as favorable case. So unless overdraft is specifically mentioned, unless there is a word overdraft in the problem, we assume it is favorable condition. So in favorable condition, the addition or subtraction rule for arriving BRS is, if given book balance is more, subtract that transaction, or else if opposite book balance is more, add that. What is that? That is, given opening balance he has given us as per cash book. Opening balance as per cash book has been given. He has given a particular transaction. Considering the transaction, it results in higher passbook balance compared to cash book. So opening balance given as cash book, because of the transaction T1 is resulting in more passbook balance compared to cash book. So given book is cash book, passbook balance is more, that is opposite book balance is more. So if opposite book balance is more than the given book, then add this transaction, else subtract. See, if opposite book balance is more, add. If the given book balance is more, subtract. In overdraft, reverse. If given book balance is more, add that transaction. If opposite book balance is more, subtract that transaction. This is the simple rule we need to remember in BRS. And we can solve the problem for 2 marks easily. So I'll take an example and then I'll try to find the, we'll try to solve it so that the concept will be more clear. Yeah. See, he has given that balance as per cash book is 1000. Consider the following transaction and find balance as per passbook. See, now opening balance is given as per cash book and there is no word of overdraft in the question. So it is a favorable condition. So given book is cash book. In favorable, if given book balance is more, subtract. That is if given book cash book balance is more, if cash book balance is more than passbook, then subtract the transaction. Or opposite way, if passbook balance is more than cash book, that is if opposite book balance is more than given balance, then sorry, if opposite book balance is more compared to the given book balance, then add that transaction. Okay, this is the rule. Now he has given some 6 transactions. We'll try to find out whether we need to add it or subtract it, right? See, check issued for ₹100 but not presented for payment. See, I have issued a check of 100 to my customer, but he has not presented it for payment. So as soon as I am issuing the check, I'll enter this under, since check is issued, that is cash is going out, payment is being made, cash is the real account and the rule is debit what comes in, credit what goes out. Since cash is going out, I'll record this transaction under credit side of my cash book. Whereas since it is not yet presented for payment, the entry in the passbook will not be done. So considering this transaction here, entry in cash book is already done, whereas entry in passbook is not yet done. And here the check has been issued for ₹100 but it is not presented for payment. So in this case, I have already debited, I have already entered this under credit side of my cash book, whereas the same amount is not yet debited from my passbook balance because the check is not yet presented. So here my passbook balance will be more compared to my cash book because the debit entry made by banker is not yet done because check is not presented. So when passbook balance is more compared to cash book and given book is cash book, that is opposite book balance is more, then we'll add this. Clear? Next. Check received of ₹50 but not presented for me. Some customer has given me check. He made his payment by way of check. I have received check of 50 but I have not deposited this check in my bank. Check received but not deposited in bank. So as soon as check is being received, I'll consider this 50 as my inflow and I'll enter this under debit what comes in, credit what goes out. Since it is coming in, I'll enter this under debit side of my cash book. But same 50 will be credited in my account by my banker only when I'm depositing my check in the bank. Here I have received the check, I have made the entry in my cash book but I have not deposited in the bank. So my entry in my passbook is not yet done. So in this case, my passbook balance will be low compared to my cash book balance, considering only this transaction, that is plus 50 has been entered, whereas entered in my cash book, whereas the same plus 50 has not been created in my passbook because I have not deposited check in the bank. So passbook balance will be less compared to the cash book balance. So if same book balance is more, given book is cash book, here cash book balance is more. So if same book balance is more, subtract. Clear? So add, subtract, then bank executed standing instructions to debit our account for rupees 200. So this debit has been done by bank directly, though it is based on my standing instructions, but my entry, same entry will be done in my cash book only after receiving statement from the bank. So in this transaction, my passbook, so my account with the bank has already been debited, whereas the same entry has not been reflected in my cash book. So here also passbook balance will be less compared to cash book. So if given book balance is more, then subtract. Next, interest of rupees 50 paid by the bank. Interest has been created into my bank account, but I don't know this. So entry has done in passbook but not in cash book. So here passbook balance is more compared to cash book. So given book is cash book. Here the passbook balance is more. Opposite book balance is more compared to the given book balance. Then add that transaction. Then debit balance of cash book was undercast by rupees 100. Debit balance of cash book. What is debit balance? Cash is a real account, so in real account, debit what comes in, credit what goes out. So debit balance of cash book means whatever the amount is coming in, inflow, is undercast by 100. Undercast means I have written a lower value of 100. So if I am receiving an inflow of rupees 200, I have entered this transaction as inflow of rupees 100. Clear? So my cash book balance is low by 100 rupees. On this transaction, I have debit balance of cash book is undercast by rupees 100. So debit side is debit what is coming in. So inflow. So inflow I have shown as a reduced amount of rupees 100. So here also my cash book balance will be low compared to my passbook. So I'll add this transaction. Same entry if it is given as credit balance of cash book was undercast. Credit balance means debit what goes out. So what is going out? So I need to send 200 out, but instead of 200 I have written only it as 100. So here my past cash book balance will be more. If credit balances of cash book is undercasted, then cash book balance will be more. Whereas if debit side of cash book is undercasted, then cash book balance will be less. Clear? Then last, entry of rupees 100 was entered on debit side of cash book instead of credit side. Now see, this has a doubling effect. 100, instead of writing it on credit side, I have written it on debit side. So actual is credit side. Actually it is to be entered on credit side of cash book. Credit side of cash book again real account. Rule is debit what comes in, credit what goes out. So on credit side, that is it has to go out. So instead of out payment, I have written as in payment. So my cash book balance is, actually my balance is, say assume that preliminary my balance is at 500. Then I need to enter this 100. It should go out, credit side, it should go out. So minus 100. So my balance will be 400. This should be the actual case. But instead of this, what I did, 500 is the initial balance. Instead of writing this 100 on credit side, I have written it on debit side. Debit side I have taken it as inflow, that is plus 100. So this will be 600. So instead of balance which should be at 400, now the balance is at 600. That is my cash book balance is more by 200. See, wrong entry, wrong side. Instead of entering on credit side, on debit side we'll have a doubling effect. See, wrong entry, the transaction amount is only 100, but the effect is 400, 600, 200. Difference is 200. So when the entry is made on the wrong side, the effect will be doubling effect. So here, since the entry which need to be entered on credit side is entered on debit side, my cash book balance is more compared to the passbook. So if given as cash book is balance is more. If given book balance is more, then subtract that transaction. Here subtract rupees 200, not 100, because entry is of opposite side, it has a doubling effect. Now see, given us cash balance as per cash book is equals to 1000. Now we need to add some transactions. What are those transactions? Add plus 100, then second is subtract, third is subtract, fourth is again add, that is plus 50, then fifth is also add, that is plus 50. That's it. So this is 200, 1200, then subtract transactions are, second one subtract 50 minus 50, and third subtract 200 minus 200, then fourth is add 50 cents, sixth is subtract doubling effect 200, so this is minus 450. So this is like 2 450 750. Am I right? Yeah, 750. So this is balance as per passbook. Given book is balance as per cash book. So by considering these transactions, we arrive at balance as per passbook. In examination, he might directly give this balance and ask about this balance, or he might ask whether these transactions to be added or subtracted. Clear? That's BRS.